Hello, everybody, and welcome to our online interactive event today, where we will be discussing sustainability and due diligence for the front line, particularly in the FSI industry segment. I'm Andrew Yates, and I'm the CEO and co-founder here at Artesian, and I'll be your host today. At Artesian, we combine leading data science with the world's best business information to revolutionize frontline effectiveness in the FSI space. So whether reviewing supplier partnerships, prospecting for greener companies, or approving sustainable loans, all organizations are using data more intensively to gain deeper insights before making key business decisions around opportunity and risk. So today, with a little help from my friends, we will assess the commercial opportunities, the risks, and the challenges of building a sustainable first business. So let me introduce our speakers today. Firstly, Gillian Lofts, who is the Global Sustainable Finance Leader at EY. And joining her is Robert Keegan, who is a person right at the customer coalface as a regional manager for Triodos Bank, who specialize in financial services products which benefit both people and the planet. So let's begin by my asking each of you to give me a quick 60-second career snapshot and how that informs your perspective today. And secondly, why is sustainability so important in today's world, and what does sustainable finance really mean for you? So starting with Jill.
Thank you, Andrew. Hi, everybody. It's great to be here on this amazingly warm lunchtime. So glad to see you here rather than outside taking a quick half hour in the garden. I've worked in the wealth and asset management business for over 25 years. 3 years ago, I started working on the embankment project for inclusive capitalism, which developed and released an open source playbook for creating long-term value frameworks for firms, i.e. how could firms look beyond annual and quarterly reporting to create long-term value for all stakeholders. 2 years ago, I took up the mantle of sustainable finance leader for EY. And to your question, Andrew, around, why do I think it's important and what does it mean to me personally? So I think it's important in today's world because it's become a very pressing issue impacting current social, societal systems, including the financial system itself. And for me, sustainable finance is about safely supporting society and the economy more generally to go through what will be, I think, some pretty challenging sustainability transitions.
Okay, thank you, Jill. And Robert?
Thanks, Andrew. Hello, everybody. My name's Rob Keegan. I'm a regional manager with Triodos Bank. I'm a career banker, having spent almost 29 years with NatWest Group and the last 3 and a bit with Triodos. Andrew explained a little bit about Triodos just now, but for those who know little about us, we're a sustainable bank founded in the Netherlands in 1980. We also have offices in Belgium, Spain, Germany, and the UK, where we were founded about 26 years ago. It's a pan-UK operation here with a head office in Bristol, where I am now, and it's not so sunny as where Jill is. And we also have hubs in London and Edinburgh. For the last 20 years or so, I've specialised in business and commercial banking, and the last 10 in a variety of leadership roles. And I currently head up the Triodos business banking team in Scotland, the north of England, and Wales. So Andrew asked a couple of questions about sustainability. Why is it so important in today's world? Climate change is the most obvious answer, but sustainability is also about social inclusion and also social inequality. And I believe that COVID has shown us all that social inclusion and sustainability really do go hand in hand. Public perception is changing rapidly, and I think that any organisation which is going to drag its feet really does so at its own peril. And there was a court case in the Netherlands last week in relation to Shell. And if anybody hasn't read about that, have a read about that, because that's a stark warning to companies in the battle against climate change. And the other question which Andrew asked was, what does sustainable finance mean for me? For me, it means a number of things. It's using the power of money to create positive change within society, with ESG right at its core. As just highlighted, it's of course about the environmental impact, but also about social inclusion and also about social inequality. It also means transparency. And I think what we're seeing in the UK at the moment is a sea of change, with particularly the younger generation becoming increasingly concerned about how their money is being used by banks and are demanding far more sustainable solutions.
Thank you, Rob. So let's get down to it. Jill, what are the key issues shaping the sustainability agenda, and what should leaders really have their eye on in terms of their radar for this year?
So I was going to cover 4 points, Andrew.
4 points.
Yeah, 4 points. I know you're only supposed to do 3, but I thought I'd go for 4. Regulatory drive and focus in this area is the first one, and that has a 2-pronged approach. There's a focus, particularly from central banks, including the Bank of England, around exploratory scenario modelling. So getting financial services institutions to much better identify and quantify the risk, and particularly for this at the moment is on climate risk. So that's one big area. Then on the other hand, the regulators in the UK and more broadly are very much focused on consumer protection. So we see this through taxonomy definition, SFDR, and other of the regulations, which I'm sure we'll come on to later. So reg's a big one. The second one is the voluntary commitments. They are really gaining traction. And I think, we have the Conference of the Parties, the COP26 in November, hosted jointly between the UK and Italy. And we see not only countries redefining their commitments, but also now more and more businesses doing that. So we've seen a lot of movement across asset managers, asset owners, insurance and banking around their net zero commitments. And also, interestingly, sustainability statements and sustainability strategy more generally. So I think big drive on that. Third one is changes to government policy and fiscal policy. Because of the quantum of change that we're looking at here, governments will need to nudge quite a lot of behavioural change. Things like homeowners making their homes more environmentally friendly, things like moving to e-vehicles and other types of transportation. Some of that might get done through tax credit schemes, some of it through other schemes, but definitely expect to see more and more government and fiscal policy focused on this. And then the final area I just pick up on, and Rob's already alluded to this, is the changing consumer attitudes towards climate change and sustainability. I guess we'll talk about this a bit more during the session today, but we're definitely seeing consumers not only look for more sustainable products and services, but also what's in those products and services that they're buying.
Thank you. Yeah, it'd be interesting as to how we're going to balance the affordability of the sustainability options versus the genuine constraints we're going to face economically as we recover from the pandemic. And on that topic, Rob, tell us a little bit about how you approach the business of helping businesses through the pandemic. We started working together just before COVID hit, and we have worked with you subsequently through COVID. And I'm particularly interested for you to share how you helped businesses through COVID, particularly as a Preseabills approved lender, given that sustainable lending stance that you have. And have you any examples you can share?
Yeah, I mean, Preseabills, we were not a member of the EFG scheme, so we had to quickly decide if we wanted to become accredited for Preseabills. But luckily, we were already in discussions with the British Business Bank about the potential for joining the scheme. So it was a relatively smooth and straightforward decision for us. And from the outset, we were keen that the scheme was open to both existing and new customers so that we could maximise the impact. And this is what we were able to do. There were a number of scheme rules to comply with. We quickly had to get our heads around that and get new processes in place. And we have to overlay that then with our key criteria of there needing to be a mission and values fit. You've asked for a customer example. I shouldn't have favourites. One of my favourite propositions we supported last year was a customer called Embercore. It's a startup business and was designed to create the UK's first all-electric intercity coach service, which connected Dundee and Edinburgh. Their plans have been delayed due to COVID, and their business model had to change as they had to scale back estimated passenger numbers, for example. So this is a venture which is right down our street because of the environmental impact. However, the word startup and pandemic certainly complicated the situation for the customer and indeed us. And really, Preseabills proved to be the enabler. For the customer, the business interruption payment is supporting cash flow in year one. And for us, it provided some security. And we are immensely proud to have helped facilitate the UK first. And the UK government appear to share our enthusiasm as they've asked us and Ember if they can use this example in one of their own advertising campaigns. So hopefully you and everyone else will see this come to fruition in the not too distant future. That's
really interesting. I'll certainly ask you a little bit more about how you were able to do that in the stealthy way that was required a little later. Okay, what I'm going to do is I'm just going to ask. We've got about 70 people on the event today. I'm just going to ask you to take 10 or 15 seconds to answer this question, which will really help inform our panelists. And does your company place sustainability as a key issue for future growth and profitability? Please answer that question. Off you go. All right, we should be getting that answer any second. Okay, and that's probably why we've got so many people listening in today. So 82% of you said yes, 15% said could do more. Nobody said no, and we've got one person unsure. Well, maybe by the end of today, we might be able to help that person that's unsure. So Jill, back to you. One of the biggest misconceptions companies have is the belief that embedding an ESG commitment costs more, or at least I'm told that's a misconception. What advice would you give companies with these concerns?
So we undertook some research last year, published a paper with Royal London that looked at over 30 academic papers and over 2,000 empirical studies and literature on the subject. And our findings suggested that corporates with strong ESG ratings do show some positive characteristics over those which don't. So we looked at data over a 25-year period, so quite an extensive period, and we were able to evidence that these corporates had less volatility in their share price, and they had cheaper access to capital. Right now, that's last 25 years. Okay, I believe that this will be exacerbated going forward. We're starting to see, exclusions and other criteria being applied much more liberally than we've seen in the past. We've also started to see more and more products that are enablers of transition, whether it's climate or sustainability, come onto the market as well. So I think early adopters will probably suffer first mover costs, right? That's inevitable. Data standards and taxonomies are poor, information quality is variable, frameworks and scenarios are yet to be modelled effectively. But if you just take, let's say, climate change and its associated societal impacts as an example, that feels quite pressurised at the moment. It feels quite urgent. And so making a conscious decision around what your strategy is going to be, if it's only on that one agenda over the next 5 years, definitely is starting to feel more and more of an imperative. And I think the one question I would say is, whilst you will have potentially first mover costs, deciding when are you a first mover or when are you a laggard is going to be quite difficult to call.
I guess one of the first steps is figuring out where you are on the scale of neutrality. And I guess there are some easy ways to ascertain that. Perhaps I'll come back to that a little bit later. Rob, question for you. Just going back to what you were saying before about how you determine what the determining factors are for the suitability of lending criteria around the sustainability agenda. How do you decide whether you can work with a customer? And can you share a little bit about your kind of due diligence process, perhaps how you might use fintech to screen and also exclude the companies that might not meet the socially responsible criteria you're seeking?
First thing to say is that we're not an all-of-market bank, so an initial task for us is to establish if there's a mission and values fit. And narrowing that down a bit, we will only look to provide finance if the organisation has clear environmental, cultural or social benefits within society. A good example, and one of my favourite examples to use, is a pub. We will not fund a commercial pub operation. However, we have a real appetite for community pubs, as long as it's owned by the community, for example, via a community interest company, and is run for the benefit of the community. Another example is in the healthcare sector. We fund a lot of care homes, but we look for more than, say, achieving minimum standards like a good CQC rating. We want to see that they really go the extra mile for their residents and indeed their staff. A core driver of Triodos is promoting human dignity, so these aspects are very important to us. And alongside that, what I've just talked about, we'll also look for clear evidence of sustainability strategy. For example, if they own a property, what have they done to improve the EPC rating, or is there a clear plan to improve it? And for us, this presents a great opportunity to influence customers and potential new customers to think clearly about how they can achieve net zero. As far as fintech's concerned, one thing which Preseabills and the recovery loan scheme has resulted in is massively increased volumes of work, which has created some real pinch points for us. So virtually overnight, we needed to find smarter ways of working, and having access to tech, which can provide a good snapshot of key data for an organisation, is vital. And I know that we spoke at the beginning of Preseabills, and the screening functionality via Artesian has really filled this void and has supported us. It's helped us to identify customers who we want to do business with, but it's also helped us to quickly spot fraud attempts. And that has been, unfortunately, one of the downsides of Preseabills and the recovery loan scheme, and that there's been a number of fraud attempts. So it has helped us work smarter and quicker, which has been absolutely fundamental in us being able to help lots of customers with the schemes.
So I'm going to take that segue, and I'm going to ask a controversial question, and this one's coming back to you, Jill. And there's actually two perspectives on this. One is fraud on the one hand, somebody masquerading, looking for grants and funding that might not be eligible or worthy. But I read somewhere that jumping on board the sustainability bandwagon could be an open door to mis-selling. So what are your views on that, and what safeguards can institutions put in place to ensure that can be avoided?
Yeah, I think, Andrew, there is a lot of discussion across the industry around, potential mis-selling and greenwashing, if you like. And I think it falls into two distinct categories. You've got one area, so the data around the underlying assets is not great. There's not great consistency. The quality of the data is not good. It's imperfect, and the information's not great. The comparables are challenging, right? On the other side, you've got consumers who, very much their personal preferences, values and beliefs come into play here. And so I think if you take the first point, and I'll give you an example. So we don't know exactly how climate change is going to affect food production globally, right? There are transition pathways that have been developed, there's scenarios that are being developed, but how it's actually all going to transition, we don't know. It's an unknown, okay? And of course, because of that will in itself create risk around risk discovery and pricing, right? You might think that some of the assets that you've invested in or that you've lent to are going to go through a safe transition. You might think that they are, let's say, green. And then over time, you might discover that, you know, things look a little bit different. And so I think where we're going to get to here, you know, and I think Rob mentioned this earlier, disclosures, reporting, data, information is so critical to the advancement of the sustainability agenda. And I think, you know, financial services firms will be constantly assessing and reviewing ESG factors because they'll just get, you know, they'll improve over time. On the other side, looking at personal preferences and beliefs, you know, if you take a retail investor as an example, they will have different values associated with sustainability. So one person might rate, let's say, preservation of biodiversity over gender diversity. Another might rate water quality scarcity over reduced inequality. And of course, you might look at me today and say, what, really? Are investors really thinking about that at the moment? And I would say the trend is increasing on that as more information becomes available to consumers. And as Rob said earlier, you know, consumers are becoming a lot more interested and a lot more aware. So therefore, you know, Andrew, are you the investor who rates biodiversity preservation, or are you the guy that rates, you know, inequality? And I guess, you know, the role, therefore, that the financial services firms need to do, there's a lot around transparency, education, information, so that, you know, I'm really transparent with you around what it is that you're investing in, and you've got a good understanding of what it is, because your preference may well be completely different or slightly different to Rob's, and you want to know that up front and as you're going through that investment journey.
That's there's a lot to think about there, and there's a question just come up, Andrew. How can you be leading a conversation today on sustainability when you've got a petrol pump in the background? I do drive a Tesla, and the petrol pump is fake. At least it's an old antique. So, but that leads us on to our second poll question, and this really talks to how do you take your colleagues and your employees on the journey with you. So the question is, how engaged are your employees in your sustainability efforts, assuming that you are making the effort? Please answer that question just to give us a perspective. Okay, here comes the answer. Okay, so 30% moderate, highly engaged, 62% moderately engaged, and 9% either unsure or not engaged at all. What would the kind of top 3 bits of advice you might share with people who are considering this or are considering taking it more seriously and helping educate their team members and their employees? And I'm asking from the perspective, you, Robert, as somebody that works in an organization that has sustainability at its heart, making a difference to people and the planet, your strapline. And Jill, as somebody that advises key clients on how they can lead that sustainability agenda with by driving culture within. So I can start with you, Robert.
Yeah, I mean, I think it's important to realize we can all play a key role, whether you're setting the agenda as a leader or are interacting regularly with customers in a relationship capacity. I would say the first thing to do is to really try and understand what sustainability really means. And I talked earlier about it being more than environmental considerations. And if you're a leader, then think about engagement. One thing which really surprised me when I joined Triodos is that in addition to business travel, I also have to report my journey to work data.
I was going to ask you. I mean, is it? Talk to us about some of the real things that this represents.
Yeah, I mean, I have to say every year how many miles I've travelled to work and what modes of transport are used. So that data then can be included in carbon offset calculations. This is going over and above. And when I first saw that, that was a real statement of this is the way we do things around here. So I think having items like that really drives engagement. And I think also if you're interacting directly with customers, I'd suggest a standing agenda item where you seek to positively influence the way in which your customers operate. Also being proactive in thinking about supporting a clear transition. It can be ideas, it can be finance. I always find peer-to-peer examples are very powerful. So if you learn something from one customer, there's absolutely no harm in sharing that with another customer to help them, because the more people we can influence getting towards net zero, the better.
That's good. Thank you. Jill?
Yeah, no, I mean, look, I think having your sustainability strategy or net zero commitment, I agree with Rob, that is very motivating, and we found the same at EY when we announced our net zero commitment. I find actually, and maybe just EY people have drank the Kool-Aid, but I find in my firm people are very keen to engage with this, and in many respects I'm thinking about how to channel the energy. So I suppose I was a little bit surprised at the feedback, but then I probably have blinkers on given the role I do. I do think, tone from the top is important. The strategy is important. Thinking about how it permeates through the organization. I suspect you'll have a challenge between people that are very enthusiastic and how do you channel that energy in the way that is helpful to them and to your business, and then those that perhaps are a bit more skeptical about things like we've had feedback where people say, well, we're kind of going to focus on the societal impacts of sustainability, not the climate impacts, and you're kind of like, well, actually they're really intrinsically linked, so let's have that conversation. Or we might speak to organizations where people say, this is just a compliance exercise, isn't it? And so I think, this ongoing discussion and the ongoing education is really important, because, and I can honestly say when I have discussions within EY, I feel like I say the same thing like 10 times over, and the 10th time somebody's like, okay, right, I got it.
That's what they say. You got to tell somebody at least 6 times before it goes in. So
it's such a huge subject, right? It's really huge and it's really complicated, and I do think that ongoing engagement is really important.
So what additional support and guidance, and this is a question again to both of you, could you give to your customers to help them understand how they can move toward carbon neutrality? Rob, if I was asking your advice on behalf of the Artesian company, what would your kind of top guidance points be?
It's a great question, Andrew, because there was a recent survey by the Zero Carbon Business Partnership, which indicated that 71% of SMEs could not recommend a single web source for help on decarbonisation. And this bit surprised me, 1 in 3 were not familiar with the phrase net zero. So one thing I'm doing as a sort of side project representing Triodos is I'm part of the Bankers for Net Zero project group, which comprises representatives from a few banks. And a lot of what we've talked about is ensuring that the 70% know where to go. And these findings will be presented to UK Parliament later this month, and hopefully some key actions will follow. Going back to some specific sort of tips, a good start for 10 is that we really lead by example. So we have credibility in our customers' eyes when we talk about this topic. And I'm quite fortunate working for Triodos is that a lot of our customers and organizations we interact with really get it. So when we talk about some ideas and tips, we're pushing on an open door. We're not facing lots of resistance. We'll talk to both existing and new customers about their sustainability policy. And our chief exec recently had a letter from a new to bank customer praising the fact that one of our relationship managers spent time on this very subject. And that shows how powerful this can be, and how receptive a lot of people are to having these discussions. We also talk proactively about financial transition, for example, retrofitting properties. And I also talked about peer-to-peer examples earlier. There's nothing more powerful than sharing stuff which other customers are doing. So there's lots of ideas, but going back to what I said at the beginning of this response, there's so many people who don't know where to go and where to get support from. So we play a really key role.
And Jill, in terms of your answer, and I'm just going to weave in a question that one of the attendees has just asked. What would your tips be, and what role does government have to play? Somebody's just made the point that as banks and financial institutions, we can only do so much, but educating, in particular, SMEs that don't have the physical resources or the systems and processes in place. What role and responsibility should government be playing in all of this?
Yeah, tough one. I mean, I think government would expect, private finance, if you like, financial services to clearly adapt. So, manage the risks appropriately, innovate products. As Rob said, you need to lend through the transition as well as financing the green, because obviously not everything is green today. Things need to change. So then I think, I think government perspective would be that there is the sort of, let's say, the typical financial services role to play here, lean into the problem, help the transition to happen. I think a grey area is around education, training, nudging the societal change and all those things. And I think, governments are looking not just at financial services, but at other sectors to say, well, okay, these are slightly blurry lines, right? Should government actually do all of that, or should the private sector, maybe leap in and play a bigger role? And I think when you look at some of the stuff, and Rob's just alluded to it as well, where the rubber hits the road, where the financial services connects with small businesses, with consumers, etc. You are looking to provide products and services to those individuals, potentially sometimes to help with transition or to fund green. And probably there's a natural education process that happens there as financial services are providing more and more products in that space.
Okay, well that's good. I'm gonna kind of come back to that as we get towards the end. I've got another interactive question. This is the last one, and it centers around cultural change. And the question, if you could just pop it up there for us, Rob, is cultural change needs to come from the top. What level of involvement does your board have on sustainability? I think both of you have already alluded to quite high involvement and leadership by example, but if everyone out there can just answer that question, what involvement does your board have on the sustainability agenda for your organization? Okay, here comes the answer. Okay, continuous involvement. So that's great. It really is coming through as a key issue. I know it's a top 3 issue for most of the organisations we serve. I'm going to ask this one of the last questions here. How do you encourage banking and finance firms to be thinking in terms of putting sustainability at the top of their agenda? And I'm going to ask that question in a way, well, what if they don't? What's the consequence of doing nothing? Really, give it to us in terms of the way you see it, both from a kind of an economic opportunity and risk perspective, if you would. Starting with you, Jill.
Thank you. I think you could run out of road, right? That's one possibility. Consumers and societal pressure could cause issues for you. I think reputational risk, whether that's you and the way that you do business, or the products and services that you offer and how you offer those, both in terms of, let's say, legal risk and actually, reputational risk. I think that's, they are the sort of areas. So if you do nothing for a long period of time, let's say 5 years, you may find that there's a business for you during that period. But I think you would definitely run the risk of reputational impact, and it feels like that is gaining momentum.
So let's say that argument lands, and we're on the road. Which is more important? Is it carbon reduction or is it carbon offset? Which should be more prevalent?
Well, and I'm sure Rob will say the same thing. I'm a net zero subscriber, which is ultimately reducing your own emissions down to the Paris Agreement of less than 2%, and offsetting whatever it is that you absolutely cannot reduce. And so I kind of, just offsetting, in my mind, is challenging as an approach. I think as a business, we should be looking at being aligned to Paris and offsetting what you just can't get rid of.
Okay, and Rob, just to take you back to the beginning of the question, and then with that last piece in there.
Yeah, I mean, as Jill touched on, there's massive reputational risk, and the public are demanding that there is change. And I think there's so many commercial opportunities aligned to this as well. So there's increased customer loyalty, and there's also the ability to develop new opportunities as well. And I touched on Embercore earlier. I think these types of operations and organisations will be drawn to like-minded organisations. And a lot of our customers are aligned to the approaches we have are aligned to what we do. In terms of Jill guessed what I'd say, and I'm exactly the same. It is in terms aligned to the Paris Agreement as well. So, and that's something which Triodos is aligned to as well, and how we are part of the PCAF. And that's something which we really do subscribe to.
What does PCAF stand for? Partnership
for Carbon Accounting Financials. Okay. So it's a measurement for measuring carbon. Basically, it's financial institutions, or some are members of it. We are one of the subscribers to it. It's worth a look, because it is a useful tool for measuring not only your own carbon, but also from your back book, from customers, etc.
Okay, 2 more questions, and then it'll be time to thank you both and wrap up. And the first one's again for you, Jill. There can be lots of misconceptions about what good looks like from a sustainability standpoint. I happen to know on good authority that at EY you have something called the Sustainability Index of Successful Sustainability Initiatives. There's probably an acronym for that. Do you have 1 or 2 quick examples you can share around what good looks like in relation to that index that you keep?
Yeah, so what we do is we measure firms across 200 ESG factors. Okay, it's publicly disclosed information. We often see actually quite a big discrepancy between what's really going on in the organisation and what is publicly disclosed. So I think my first, and sometimes what's disclosed looks better, and sometimes what's disclosed, it doesn't actually look as good as what the organisation is doing. So, I would certainly say, and we do see this a fair amount, where you have achieved some really great, let's say, impacts to, the local community, as an example. Can you quantify that? Can you report that? Because, actually, if you're leading in that area, then it's nice to be able to include that in your statements. So I think sort of just really having a look at what you are doing on the ground and seeing that that's reflected. We tend to use the United Nations Sustainable Development Goals as a sort of a little bit of a framework in terms of overall sustainability strategy. And I think, looking at, as a firm, when you're looking at your sustainability strategy, just sort of working out what are you doing against each of those goals. So again, if you take some, you could take climate change, but equally you could take water purity and availability. And it's kind of, for me, there's a big thing here around, can you determine metrics? Can you measure against those? And then can you compare them, let's say, to other players within the same sector? Because it's great to have an aspiration around the different SDGs that are out there. But, can you quantify what you're aiming for? And then can you measure yourself? And can you tell people how that compares with, either others in your sectors or other more broadly?
And I'm guessing you said that the information is available in the public domain. Is that on your website? Is that something that people can easily find?
For the index, yeah. So we've done banking and insurance, and then the asset management one is due out in July.
Okay, perhaps we can, as a follow-up, send a link to that on your behalf, just to educate
Perfect.
people. That'd be great. Okay, so just the final question. We've got a couple of minutes, so nice and snappy, nice and quick. There's been a lot of information shared today. It's been amazing. We've got a lot of relationship managers, a lot of people in the front line on this session today, and they're wondering, what are the real standout commercial opportunities that they have to build sustainably focused services that they can kind of take to their portfolio. So I'm not asking you to give away all your trade secrets, Rob, but what are the things? What are the kind of trigger events? What sort of things should we be tracking in the media in relation to our customers and prospective customers, so that we can bring that sustainability agenda into the thought process and into the thinking around products and services? If you could start with you, Rob.
Well, I think it's important that I talked about it earlier. It's making sure it's on the agenda with every single customer meeting we're having, and the peer-to-peer examples are really powerful. But there's lots of things we can follow. And again, I'm plugging RTs in here, for example. I take up lots of information which I share within Triodos from the daily news feeds. So and that's something we share with customers as well. So that's a great thing. But sustainability needs to be in an organization's DNA. And I talked earlier about not just environment, but right across the ESG spectrum, to ensure that everyone's fully engaged, and that's a standing agenda with absolutely all customers. I think we know that this is the way the world is moving at the moment, and I touched on Shell earlier as an organisation which is being chastised for dragging its feet in the courts. And there's massive commercial opportunities, I think, for lots and lots of banks here. Renewables have been around for a while now. I talked about Embercore being the UK's first all-electric coach route. And there's lots of these fledgling industries popping up all over the place. So I think the banks that are showing a real appetite to support and living these values are the ones that will benefit the most from it.
Thank you. And any parting thoughts from yourself, Jill?
No, I completely agree. I was just going to say, this has been quoted by many people as, potentially one of the biggest opportunities of our time with respect to, funding the transition and funding green. And if I just think about one example, which is how much supply chains will be disrupted. We've already seen in COVID, resiliency of supply chains changed. We've already seen businesses look at local supply versus global supply, and the circular economy. And that's just sort of one area where I would say, that feels like there's a huge amount of change that will happen there. And of course, it kind of all needs to be financed.
Absolutely. So get solar panels on your roof, drive an electric car, and go vegan. That'd be the summary takeaway. Um, Jill and Rob, it's been a real joy to spend the last 45 minutes with you. Thank you so much for the interaction. Loads and loads of information to take away there for everybody in attendance. We've had a 70 or 80 people join us this morning, this afternoon as it is now. Please go away and enjoy the rest of today and the sunshine. And from all of us at Artesian and everybody that's attended today, thank you so much. It's been a great way to spend a lunchtime. All the very best. Thank you.